Hello and welcome to my YouTube channel. In this video, I'm going to share with you 6 tips on how to act like a real investor. These tips have helped me become the successful investor that I am today, and I believe that they can help you too. Whether you're just starting out or looking to improve your investment strategy, these tips are essential for any investor looking to make smart investment decisions. By following these tips, you'll be able to approach investing with confidence, minimize your risks, and maximize your returns. So, without further ado, let's dive into these tips and start acting like a real investor. The very first tip is to not sell panically. I know that in tough times it is sometimes really hard to hold your positions, whether it's in the stock or real estate market, especially when you lose your winnings. But believe me, it is very important to hold your positions during a crash, and you will thank yourself for it in the end. Because investing is a long-term activity, and it is a fact that we are confronted with crashes again and again, whether it was the real estate crash in 2008 or the dot-com bubble in 2001. Crashes are a part of investing, just like boom phases, but one thing is clear: if you hold your positions for a long time, you will surely benefit from it despite crashes. I mean, just look at the Dow Jones. You could have invested your money in 2007 before the crash, and still you could be making really massive gains today. Especially surviving your first crash is very hard. I can still remember when I invested in stocks and was immediately confronted with a recession. It was bad times, but in the long run it was absolutely worth it to hold my positions. But you also have to clearly diverge between positions that no longer have any prospect of profit. In every crash, review your position thoroughly and ask yourself objectively whether that position has any prospect of profit. The main thing that helped me was the question of whether I would invest in this investment again today. Very simple example, let's say you bought a stock a year ago and it has dropped significantly in value. Now you have to ask yourself the question, would I buy it now at the current price? If so, then I would hold the position. If not, you can also consider selling it. Many ask me what else is advisable in a crash. Well, this brings us to the second tip, namely buy the dip. Now, some are probably wondering what I mean by buy the dip. Very easily. If the market is going down, you should take it as a blessing, compared to a supermarket that is reducing all of its products. So why not buy again? Of course, such a crash always unsettles a lot of people and the market doesn't look very safe in general, but as I said before, it will really be worth it from a long-term perspective. And of course, you will also lose in the short term, but that's normal, because nobody's able to make the perfect entry. And just one more note, crashes in particular generate the highest returns, so your courage and patience will really pay off well, believe me. I myself also prefer crashes as a purchase phase because I can buy things much cheaper, also known as a counter-cyclical strategy. My next tip is quite similar to the first tip. It is important to forget your emotions. Emotions have no place in business. Panic selling is one of them, because panic selling is nothing more than an illusion triggered by our emotions. Emotions crowd out the objective views, causing us to get worse results. Robert T. Kiyosaki also once said that when emotions rise, intelligence falls. It is always important to look at something objectively and to let the emotions go. The next tip is something that is not really considered these days. In today's society, many people are subject to the superstition of quick money, or money without knowledge, and that is totally wrong. Many ask me which investment is the most risk-free, and well, whether you want to believe it or not, it all depends on the person and their knowledge. The stock market, like the real estate market, can be incredibly risky if you have no idea. For this reason, it is incredibly important to continue your education. It is important to understand your investments and to deal with the topic. I mean, if you don't understand your investments, there are two options. Either you invest blindly, which in principle counts as gambling because you invest somewhere without a clue and hope for a profit, or you blindly listen to others and follow their tips, which are usually not really helpful. Compare it very simply with the construction of a skyscraper. See the foundation as your knowledge and the house as your wealth. It is well known that building a skyscraper requires a strong and complex foundation. Otherwise, there is a high probability that it will collapse. This is exactly where the problem lies, because most people strive for quick wealth without building their foundation, which, as is well known, does not have a happy ending. In short, there is no alternative except it. I mean, you can simply attend seminars or read books. Because believe me, a pronounced knowledge will significantly reduce your risk. And trust me, do not try any investments without informing yourself in advance, and no, just a few YouTube videos are not enough. But it should also be noted that mistakes can of course still happen, which is completely normal. And I mean, you should see these mistakes as something good, because you can learn a lot from them. Even me or investors like Warren Buffett make mistakes all the time, so don't worry. Do you also know those annoying YouTube ads where you are told where to invest to make a huge profit? Well, that's what this tip is about. And you should never ever blindly take investment tips from others. I don't mean tips like mine, but concrete tips like, hey, buy the stock or something else. You always have to keep in mind that there is usually an intention behind it, because, for example, you can be paid for referral, or it is a tip that everyone already has, which is why it's not really helpful. I don't want to say that every tip is a bad one, because there are definitely some good ones. I just want to say that you should not follow every tip blindly and should also examine them objectively. And guys, believe me, just start. In my career, I've seen far too many people who didn't just start. Be it because of their fear of losing or whatever. Yes, you will fall when investing, and not just once, but remember that failure is the best teacher you can have. These mistakes will make you the investor you always want to be. So educate yourself on the topic, learn the basics, and get started. Don't hesitate. Well, and that's it for today's video. I hope you found the 6 tips on how to act like a real investor helpful. Remember, investing is all about taking calculated risk and making informed decisions. By following these tips, you'll be on your way to becoming a successful investor just like me. If you have any questions or want to share your own tips, please leave them in the comments below. And don't forget to like and subscribe to my channel for more helpful content on investing, personal finance, and more. Thank you so much for watching, and I see you in the next video. Bye!